cryptic humility.
Welcome back, guys, to Cryptic Humility. This is episode 3. My name is Vanessa Hurley. I am the host and guide of this podcast episode and podcast in general. Today, we are going to be talking about blockchain technology. I don't know what is in the air, but it has taken me so many times to get this out, so I hope that this is going to be it. For me, it is Saturday. If you are listening to this on Monday, I hope you're having a great start to your week. I hope that I can make it better. And I wanted to talk to you guys that I am thinking about adding a new feature on this podcast episode, and that is opening the floor to welcome all you cryptic idiots. Yeah! If you listened to the first podcast episode, you know that I got scammed in the FX market. If you have gotten scammed, whether it be in FX, if it's been in crypto, whatever your story may be, even in stocks, I want to hear from you. Did you have a fake mentor? Did you fall into a pyramid scheme? Email us your story at cryptichumility@gmail.com. Guys, I'm telling you, it's going to be a little bit of a slow day. Bear with me. And we will review your video and be able to post it on the podcast. I think that this would be really beneficial because I want to hear how many people have been affected. Obviously, I've heard in my own waking life through talking to people how many people have been affected, but now that I'm opening this up to the public, I really want to hear your stories. One, so we can all trauma bond together and move forward on a better path, but also so you guys can check out the website and the business idea that I have in mind and see if it would actually be beneficial for you after everything that you've been through if you've been scammed in either market. So please email us your story, email us a quick video of your story so you can get shown on the podcast. But for sake of today, we have no Q&As. I want to get into blockchain technology. I'm going to be a little all over the place. I'm going to try to explain this to the best of my ability for you guys. Of course, if you have questions, please comment them on social media. We're on X, TikTok, and YouTube, and we will get your questions of this episode addressed at the beginning of the next episode. All right, let's get into it. So, blockchain technology. Blockchain technology is a digital, decentralized ledger or network, if you will, where you can buy, sell, and trade cryptocurrencies. You can also do a lot of other things with blockchain, but for the sake of today's episode, which this might be a two-parter, might have to make another episode after this, we're just going to be talking about it in regards to cryptocurrencies. The whole point of blockchain was to have the decentralized network in motion so no bank or no government would be regulating your money, your data, your privacy, your spending. So essentially, you would be your own bank and you'd be able to buy and sell and transact with other people on the blockchain without, for example, the World Bank monitoring where specific trades or your investments or inflation is going, which we're going to talk about the differences between blockchain technology and FX market in a little bit later in this episode. But blockchain technology's intention was transparency. Transparency because working at the bank, we experience counterfeit money, duplicate transactions, human errors. Oh, somebody hacked into the system because, actually, really quick backstory. We were trained at the bank to not click certain links. If you clicked a certain link and you made a human error, who knows? A hacker could have came into the system and hacked the entire platform where all people's money and access to people's information was right there. It's not to say that blockchain is perfected. Of course it's not. It's a new concept. It hasn't been out for very long. But what we rely on at the bank, tellers and people doing the transactions and people verifying the transactions, or the World Bank and the FX market, regulating inflation, regulating at specific times where the market is going. In the simplest of terms, we are trying to eliminate third party and we're trying to rely now more on technology to do it, on AI to do it for us. We in blockchain are relying on technology to regulate, monitor, and make sure that there is no hackers, there's no fraud, there's no duplicates, there's no schemes going on while you're trading and investing your money. It's essentially like a bank, but it's not a bank because no third party is governing what is going on. There actually is a third party governing, but no third party institution. Third party managing is crypto miners, is specifically on the Bitcoin blockchain, which we're going to talk about. But it's so important to know intention. And intention was to put more power to the people, more access to our own money, more access to our own spending, our own investments, without this really heavy regulation or monitoring coming from the bank or the government. Essentially, that was what Bitcoin's intention was, but specifically blockchain technology. Blockchain technology was to get out the middleman, get out the third party, and grow your own independence with your own money. Think about it like this. Think about a database. So picture this with me. We're in a third world. We're in an imaginary world. And we step through a door and we are able to see every single transaction or every single source on the database. It's at our fingertips. But technology is monitoring and storing that for us. We don't need to go to the bank to ask them about specific transactions or to ask them about specific things that have happened. The technology is there. We can just walk through the door and see every single thing that has ever been posted. It's completely transparent and out for the public. That is what blockchain is. Blockchain is just a huge database of transactions. And in some cases, because we're going to go over the different kinds of blockchains, but for public blockchain, anybody can have access to it. In order for you to have access to a blockchain, you set up the blockchain on your computer, and once your computer is connected to the Bitcoin blockchain, for example, every single node or computer, node is just a fancy word for computer, gets access to all the transactions that have happened on the Bitcoin blockchain. So your computer can download all the transactions that have happened on the blockchain and be able to see them in real time. So let's start talking about the whole cycle of the blockchain. Vanessa, how does this all work? I get that nobody is regulating it, but how does it actually work? So at the bank, at every single month, you get a statement. Your statement is that month's transactions for you. It's no different when you're going to trade on blockchain technology, and at the end of the month, for example, that block's storage unit, bear with me, is full. Every single block has a certain amount of gigabytes, or whatever you want to say, a certain amount of storage that it can hold. So after that month end, for example, you have all your transactions that was made through the blockchain. The blockchain and the software then takes that block, closes it, and puts it out onto the blockchain. So in another episode, we are going to be talking about specifically what that block holds and how crypto miners verify the transaction. But for the sake of today, we're not going to get into it just because I think it's going to confuse a lot of people and we're just not there yet, which is okay. But there are specific pieces in the block. One is your transactions, one is a nonce, and the other is a hash. The hash is created and the nonce is the number that you're solving for, the number crypto miners are solving for. So based off all the mathematical data that they are given, plus your transactions, and your transactions match the long numerical random string hash, those two are connected, and with that evidence and that information, you are able to solve for the nonce. We're not going to get into it too deeply. I know it's probably going to be a little confusing, and that's okay. But all you need to know is your transactions for the month get set in a block. The block gets sent out into the blockchain. Crypto miners, who are people that either are certified crypto miners or also just people like you that buy and sell crypto and happen to be very mathematically gifted and have learned how to do crypto mining, they go out there and they verify your transaction. This is called proof of work consensus mechanism, and it's exactly what it is. Crypto miners are working to prove and solve mathematical equations to prove and verify transactions on the blockchain. Once they verify that all your transactions are legit through solving for the nonce, your block gets sent out along with other blocks, and that's how they create a blockchain. A blockchain is just a sequence of people's data, a sequence of people's transactions out on the blockchain in chronological order. They've never been duplicated, they've never been reversed, they've never been voided or refunded, for example. It's all specific, accurate information from anybody who is connected to the Bitcoin blockchain that has made transactions on the Bitcoin blockchain. You might be asking yourself, wait, Vanessa, how do I make a transaction on the Bitcoin blockchain or on blockchain technology in general? You need a public and a private key. Your public key is for everybody to access. It's for people who want to send you money. Your private key matches your public key, meaning for every one public key, there is only one private key made for it, but your private key should never be shared with anybody. It's basically access to your funds and proof that you own your funds. It's like a private bank account. So you have like two bank accounts in crypto, and specifically for blockchain technology. You have your public bank account that everybody can know in order to send you stuff and for you to send, but then also you have your private bank account, which is your actual bank account where your funds are and where you prove that you have ownership of those funds. You need your public and private key to trade on blockchain technology. If you have your public and private key, you can start trading on blockchain technology, specifically Bitcoin's blockchain for the sake of this video. The difference between FX market and blockchain technology is the World Bank can step in for the foreign exchange market. If we're seeing too great of an influx of people buying the US dollar, for example, and that could seriously affect other currencies, the World Bank can step in and mediate that. With blockchain, it's on a protocol. Once you send out a transaction, once you invest, the technology is going to regulate and monitor that for us. But at the same time, a lot of cryptocurrencies are not backed by anything but supply and demand. They're not backed by the US dollar or any fiat currencies. And also for Bitcoin, I believe has a cap of 21 million Bitcoin that will get sent out. And every 4 years, there's a halving. So at the halving, so what I didn't mention to you guys, which I wanted to talk about in a future episode for crypto mining, is that crypto miners, when they verify your block or verify anybody's block on the blockchain, they receive a reward of that specific coin. So whatever blockchain that they're on, for example, if they're on Bitcoin blockchain and they solve and verify a block and it gets sent out into the blockchain, they receive incentives like new coins, like more Bitcoin for themselves. So, but at the halving every 4 years, that is going down 50%. So we're not seeing a huge concern around inflation for Bitcoin because there's only X amount of reserves that we have. It's kind of like the gold standard in a way, but Bitcoin only has X amount of Bitcoin that can get sent out. So there would be no duplication or no printing or sending out, if you will, more Bitcoin than we already have. And every year we're experiencing that number not every year, every 4 years we're experiencing that number get cut in half. So the chances of inflation, specifically in the Bitcoin blockchain, are a lot lower. And that's not to say that that's for all cryptocurrencies, because we'll be talking about stable coins, and stable coins often are backed by, for example, the US dollar, and obviously that inflation there can change. But a lot of the times, especially in the Bitcoin blockchain, we don't really need somebody monitoring inflation. And this makes Bitcoin a huge contender for people that have a larger portfolio and have a lot of risk in their portfolio and are trying to hedge risk. Buying Bitcoin, I don't want to say guarantees you, but definitely helps you if you're experiencing inflation and some other things that you've invested in. It kind of helps you balance out the inflation that is going on. So let's move forward. I want to talk about the different types of blockchains. This is very simple, very easy, very quick, and then we'll get into some current news. Thank you guys for listening and staying tuned. I know this is kind of all over the place. So there are 4 different kinds of blockchains. Number 1 is a public blockchain. Public blockchains are just a blockchain that is public. Anybody can access it, anybody can trade on it, anybody can utilize it if they need. It's accessible to the public. Second is private blockchains. This could be for like a global supply chain management company. They need to manage their supply chain within their own business, within their own company. They might set up a private blockchain just for them to access and utilize it without needing anybody else to monitor what they're doing. Then you have consortium, which is so hard to say. Consortium blockchain. Consortium blockchain is similar to a private blockchain, but let's say that multiple banks are trying to share information with each other or trying to send money to each other at lower fees, because blockchain technology offers lower fees in sending money. We'll talk about, and I mentioned this in the first episode, but we'll talk about Ripple, which Ripple is a payment processing system that enables lower fees for financial institutions that are looking to send money. But that's essentially like consortium, because consortium is private, but certain people can receive access, meaning like if two banks wanted to get together and share their data, share their information, they could do so on a consortium blockchain. Now, how does this differ from a hybrid blockchain? A hybrid blockchain is a little bit of everything, I would say. Let's say that you create the blockchain or you have access to the blockchain. You can give certain people access. So it's kind of public, it's kind of private. It depends on who you're looking to receive access from the blockchain. The most important one to know is the public blockchains, and also maybe the private blockchains if you're interested in certain business ventures, or if you have asset ownership and you have a lot of asset ownership and you want to be able to manage your asset ownership. That's also really good for a private blockchain. But for beginners, the biggest thing to know is just the public blockchains, the blockchains that have access, that everybody knows about, that everybody has access to, and one of the biggest ones would be Bitcoin. So those are the 4 blockchain types. And like I said, the only one you're really going to ever need to know at a beginner level is public blockchain. Also in consortiums, it could also be for like government parties too. If there's like different branches of the government that need to be sharing information with each other and need to be monitoring each other's transactions, that would also be another really good example for consortiums, specifically consortium blockchains. All right, guys, let's get into some current news to close out this podcast episode. I want to talk about the forest fires that are happening in California. And you may be like, Vanessa, why do you want to talk about the forest fires and how is this going to connect to blockchain technology? Well, there is rumor that a lot of insurance companies have been denying people access to coverage for their houses burning down. And also, we just heard in the news that Luigi Mangione, I think that's how you say his last name, but he ended up killing the United Healthcare CEO. I think his name is Brian something. And obviously he's still in court and he's still under trial to see if it was in fact him. But whoever ended up killing United Healthcare CEO and all the frustration that's happening with the wildfires in California all point to one thing. We do not know where insurance companies and healthcare companies and etc., where all their money is going. Where are all the payments that I am making? Like, if I'm making all these payments to an insurance company and then they deny me access when my house burns down and I've been paying that coverage, why am I not getting my money back? I think a huge problem that we are seeing is that it's not only just healthcare companies where we don't understand where they're spending and where their money is going, or, we don't have complete transparency about their payment processing or just their financial processing in general. Same thing goes for the government. We do not understand government spending. We do not know where all of our tax money is going. Why I think blockchain technology is so important and more people should start learning about it is blockchain technology would force healthcare companies and the government and global banks and whoever else is taking our money to be more transparent about where it's going. We would be able to see all transactions. We would be able to see where specifically they are putting our money. How much money do they have? What avenues are they going to? Especially with your taxes and the government. I want to know where the government is spending my money. And obviously Elon Musk is going to be helping us with that, with the government. It's like the government Department of Efficiency or something like that. He is helping understand where our money is going. Blockchain technology, and if more companies and if more huge governmental authorities and healthcare companies got involved in blockchain, we would be able to detect if they were doing unjust business sooner. We'd be able to detect and stand if we didn't agree with where all of our money was going. Right now, we don't have any access, we don't have any transparency, and that's the biggest issue, but blockchain is looking to offer that, to the public, offer complete transparency. And one important thing that I forgot to mention is the way that blockchain does this is through smart contracts. Smart contracts are essentially, in the easiest way, an AI or technological contract. So the blockchain programming is setting in place a digital contract that is going to occur. It could be between two parties, three parties. It's a smart contract, meaning that AI and technology is forming and following through on the contract for you. There's no need for a third party to make sure that the contract follows through. There's no need for a broker to make sure that the contract is following through. Smart contracts are a big backbone of blockchain technology in making sure certain things occur on the blockchain without needing a third party. So smart contracts were really important to mention. I know that doesn't really have anything to do with the news. So like I said, this is going to be very candid, but I just thought that I forgot to mention that to you guys, and that is really important. Smart contracts are a big part of why we don't need third parties, is because we can rely on technology to uphold agreements for us, uphold standards for us, uphold auditing for us, uphold regulation for us. There's no need for these third parties to intervene. And I think, like I was just talking about, with healthcare companies and governmental parties, blockchain is offering us to take our power back from everybody, the government, the insurance companies, healthcare companies that are just greedy and stealing our money. We're getting our power back with blockchain and being able to see where all of our money is going. And actually, if you get out of touch of all of that, at least if you're on the blockchain, you have more access to your own money without crazy regulation. And right now, the SEC hasn't even completely regulated crypto yet, so it's even more of an opportunity to get involved in it without the fear, specifically in Bitcoin, of dealing with inflation. Outside of the negative, also, what I think is current and important is healthcare companies with patient records. So if we have blockchain technology, we have a safer way of storing every patient record without tampering, without changing any evidence, without altering any evidence, without altering any medications. Like, for example, if we had issues with doctors and things that they're prescribing, blockchain technology would keep everybody responsible for their actions, for the things that they are doing in the medical field as well. Blockchain technology would keep everybody transparent. So it would even help with patient portals. It would help patients get more access to their records, more access to their history, more in control of the medications that they have been prescribed and understanding what has happened in the past. It would give more power to the people. Basically, we can get our money back from all these fraud things that we're experiencing in insurance companies and healthcare companies and the government, but with our taxes. But also, on another good note, blockchain will help a ton of businesses remain transparent. It will help a ton of businesses not need to go through a third party to set up agreements between people. Blockchain would help healthcare companies like doctors be able to store information easier, global supply chain businesses store their information easier, and just offer more honesty in the world. We're in the deepest time where there are such greedy, dishonest people on the planet. Like the CEO of United Healthcare, we saw what happened to him because of this dire need for more money for a $1 billion company, and a lot of people's lives are being taken, and we're seeing outbursts in that when really we don't need violence, we just need blockchain technology. Thank you guys so much for watching. If there was something I missed, please let me know. I mean, obviously I said I would make a second video, and I think I'm gonna have to. We'll see how I feel this upcoming week, but blockchain technology, absolutely, we need to implement it. There are so many benefits to implementing it for yourself and for the people and for our future generations, and let's hope that more people are opening their eyes to it. Please check out the website, message us if you have any questions via email. I'm leaving all the information on the video right now, and I hope to see you guys next week on Cryptic Humility. My name is Vanessa Hurley. Thank you guys so much for watching. Have a great week.